Well, world markets have not been impressive today, trading poorly for the past few weeks ever since the spike of COVID-19. Although the JSE and the Rand had a good rally last week, they may not sustain the pressure as market dynamics keep on changing from time to time. So gold is still trading at around $1,700 per, and then platinum bounced back today with the oil price expected to remain subdued for a while. So let's get an update from Director at Africa Merchant, Lavana Gopaul, who joins us by Skype. Good afternoon to Lavana. Let's first take a look at the market, starting with Asia itself. How have the market been performing in as far as the Hang Seng, the Nikkei, and the likes, in as far as trading today is concerned?
Colin, you've seen a negative sentiment throughout markets globally, of course, a pullback after yesterday's announcement that the U.S. will not be making continuous support to the World Health Organization. That amidst a recent statement from the U.S. CDC, which gives us further doom and gloom about the coronavirus, the Eurozone in negative territory, and of course, Dow futures showing a negative as well. One of the concerns, if you bring it back to South Africa, is we're a market that was already going through our own set of problems. We were in quite a deep red territory over these last few weeks. Of course, today you saw our market topple by at least 3.5%, currently well below the 50,000 level as an index goes.
All right, so when we take a look at how European markets have been trading, one has been observing how the Dow started, and of course I believe at 4 o'clock this afternoon, 9 a.m. on their side, they would be opening on the back foot, trying to reel from yesterday's downturn. Would you say that we are able to see market direction in terms of where these trends are taking us to?
There is very difficult for us to make any sense of markets in terms of a definitive trend. For now, everything points downwards, and as markets will come to terms with the kind of reaction that you're going to see in terms of job losses, in terms of the inflation of food prices, a number of goods on the shelf have started to go up in price. What you're likely to see is markets will digest all of this, and we may have a further downspell ahead of us. Consider some of the large banks, JP Morgan in the US, indicating a shrinkage of something like 20% in terms of corporate earnings across the US, and I think that might be very conservative. Global shrinkage in terms of growth may come through in the order of 10%. So when you talk about trends in terms of financial markets, it becomes difficult to have a definite answer. It's certainly going to be lower.
All right, now let's talk about one issue when the world thought it had a COVID-19 and a vaccine to worry about, when people are now complying with lockdown rules and regulations, washing their hands, being sanitized and all that. And then Donald Trump, just, when you wake up in the morning, you hear that he's no longer going to fund the World Health Organization. What do you make out of that? And should this really make one to be concerned about who then will fund who?
Okay, the World Health Organization relies on funding from the individual countries. So the US, being one of the largest funders of the World Health Organization, creates a concern, particularly amidst the pandemic that we now live with a World Health Organization sitting with a lack of funding. It will be difficult for them to continue to champion the coronavirus and, in fact, world disease and all of the good things that they do. So it does create challenges. This may be an overreaction on the part of the US, and there has been something of a blame game. This wouldn't be the appropriate action at this stage. I think they should focus their energy on trying to solve the coronavirus. Withdrawing funding from the World Health Organization also doesn't do too much to try and bolster up the US's financial position. As far as the federal government goes, it is a small amount in terms of their general economy. This is more a question of showboating on the part of the executive.
All right, let's come back home and talk about the intervention of government in terms of cushioning how the economy should not really be impacted by COVID-19. I mean, yesterday I spoke to more than 3 analysts who were saying that they have different views concerning the timing of the slashing by the South African Reserve Bank of the interest rate cut. And you also had a different view. Tell us about your disagreement regarding the timing. How do you justify your point?
I think interest rates are a very important monetary policy tool. The central bank has only a few of them, and other than cutting interest rates, they can enter into what's called open market operations, that is, print some money and buy assets, or they could try and ask the commercial banks to lend money in a more easy fashion. Using the interest rate tool is an effective and important tool. I believe that our country does require lower interest rates. I think that the timing of this should have been at least 1 month after the lockdown. By cutting interest rates now, it has an almost no apparent impact, whilst those within the formal credit space will find a difference in terms of their credit repayments. Because businesses are inactive during this period, it's only truly going to show its worth once we're fully operational. And so I maintain that the appropriate time would have been a cut after the lockdown, at least 2 to 4 weeks thereafter. There is an indication that he may cut a further 0.25%. And all of this is important. All of this is done to try and stimulate the economy. It's just that the timing of his interest rate cuts are so crucial. You will understand that South Africa has the other tool of fiscal policy, and that is to reduce taxes. Now, as far as the tax base goes, because we have a small number of people actually paying tax and a number of corporates having had a difficult period to be able to sustain prior tax payments, you find that the amount of money collected is going to shrink in terms of revenue by SARS. This means that fiscal policy is going to be a weak instrument, and monetary policy and only interest rates is probably the most effective tool for now. So I think that is something that they should have stalled and at least introduced a month after lockdown.
All right, Lavan, this could make a very interesting debate, especially when analysts disagree. So I would imagine the topic being interest rates to cut or not to cut, and the issue is when. And we'll take it further. Thank you very much for making time to speak to us, though.
Thank you very much, Colin.
Right, Lavana Gopaul speaking to us via Skype there.